Imagine this for a second. Bitcoin is down a little. Markets are shaky, sure, but one stock tied to Bitcoin is falling 8 times faster. And here's the scary part. That stock controls a massive chunk of the entire Bitcoin supply. Today we're talking about MicroStrategy, not as a company, but as something far bigger and far more dangerous. Because whether you own MicroStrategy, Bitcoin, or even a Bitcoin ETF, this situation affects you. So let's slow this down, break it apart, and understand what's really happening. MicroStrategy used to be a boring software company. Then it reinvented itself as the biggest corporate Bitcoin holder on the planet. Right now, they hold over 670,000 Bitcoin. That's roughly 3% of all BTC that will ever exist. Think about that. One company, one balance sheet, one strategy. When something this large starts wobbling, it doesn't just fall quietly. It shakes the entire system. Now here's where things get uncomfortable. Let's compare performance this year alone. Bitcoin, down about 6%. Painful but manageable. MicroStrategy, down nearly 50%. Let that sink in. Bitcoin slips, MicroStrategy collapses. This isn't a small tracking error. This is a massive divergence, and it's sending a warning signal. So why is this happening? For months, Wall Street treated MicroStrategy like a magic trick. Instead of buying Bitcoin directly, institutions bought MSTR stock. Why? Because it acted like leveraged Bitcoin. Investors were paying 2 to 2.5 times the value of the Bitcoin on the balance sheet just to own the stock. That extra price, that was the NAV premium, and as long as Bitcoin kept going up, nobody questioned it. But here's the plot twist. That premium has vanished. Completely. Now enter spot Bitcoin ETFs. Suddenly, institutions can buy Bitcoin exposure directly. No debt, no corporate risk, no management decisions, no premium, just Bitcoin at face value. So what did smart money do? They sold the proxy and rotated into ETFs. They didn't leave Bitcoin. They just cut out the middleman. And MicroStrategy, it was left holding the bag. This is the part most people get wrong. Buying MicroStrategy right now isn't the same as buying Bitcoin on a dip. You're not betting on BTC recovering. You're betting that Wall Street will willingly overpay again for something they can now buy cheaper elsewhere. Ask yourself this honestly. Why would institutions do that? That's not investing. That's hope. There's one level everyone needs to watch. Around $150. If that support breaks, debt pressure increases, forced selling risk rises, and the liquidation cycle can restart. When leverage unwinds, it doesn't unwind gently. It accelerates. This doesn't mean Bitcoin is dead. It means the structure around Bitcoin is changing. MicroStrategy isn't just a stock anymore. It's a pressure point. So whether you're holding BTC ETFs or watching from the sidelines, pay attention. Because when leverage breaks, it breaks fast. If this helped you see the bigger picture, drop a like, share this with someone who needs it, and let me know in the comments. Is MicroStrategy still a smart Bitcoin play? Or is the game officially over? We'll keep watching this closely.